Now, this is a graph in this book by this book called the Long-Term Return of Stock for the Long Run, I think, by Jeremy Seeger. It shows a different kind of asset class. Dollar means saving in bank. Gold, bill, those treasury bill, short-term treasury bill, bond, long-term treasury bill, or corporate bonds or stocks. You see the difference in the rate of return. If you put in stock, the real return is 6.7%, very much more higher than the rest of the investment. So $1 you invest in the stock 214 years ago, now it become, after adjustment for inflation, it become 1.136 million. They are ups and downs in the stock market, but the characteristic, you can see that there are a lot more of ups, a lot of green bars than red bars. So probably three quarters of it is up and 1/4 down. So still, the market is generally, most of the time, is up. Now, speculating is a zero-sum game. That means there will be some winners, there's some losers. Winners will make money from the losers. So just imagine, we as a retail investor, who are our opponents? They are the rich people, the institutional investors. They are the syndicates, who can move the market. So where do we stand when we are speculating against people in a zero-sum game? So this is not the right, to me, it's not a right way of investing. What do you mean by invest in a business? What is in the business? In the business, there are the people in the business, the management, the staff. You have the plant, the equipment. A business have the products and services, customers, suppliers. So 100 backers is one which turn $1 into $100, or 10,000 turns into 1 million. The more important thing to find these multi-backers is that we look at this, the powerful twin engine. That is the growth. That's the sales growth. Very important in us are the sales growth, high sales growth, and also the profit growth. Profit growth should follow sales growth eventually. Initially, maybe with high sales growth because of this capital expenses, R&D. Your profit may not be high, just like this Amazon. But eventually, when the profit will catch up. The other important engine is the PE expansion. When PE expand, remember I talked about this QL, when the PE expand from 10 to 70, 7 times more. So one interesting thing about QL Resources, it's actually a very traditional business, selling eggs, poultry, and ceramic. And then it plunged into, it acquired this February month. There's quite some growth expectation. So with this growth expectation, people chase it. So with the high sales, high growth, and high PE extension, that will be a very powerful twin engine for these multi-baggers, even 100 baggers. A lot of these 100 baggers start from small, but doesn't mean just go and buy small companies.
Because a lot of it couldn't make it.
Because the survival buyers.
Yeah.
The management is very important. Look at the management. The dynamic management, they can grow the company very fast.